Hello to all the passive income investors looking at AT&T and Verizon stock and trying to answer which one is the better buy. After all, they both yield 6.3%, 6.37% in a dividend yield. So it's hard to discern which one of these two telecom stocks is the better dividend stock to buy. So I'll go through some of the critical metrics that I look at when I'm trying to decide which one is a better dividend stock to buy. And that way you can tell these two apart by more than just their dividend yield. So let's get right into this comparison.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, like I mentioned at the top of the video, Verizon offers investors a 6.28% dividend yield, and AT&T offers investors a 6.37 dividend yield. They're both telecom companies. They both have the similar dividend yield. So I can understand investors asking themselves, which one is the better buy? How do I decide which one is the better buy? So in this video, I'll go through some more of those important financial metrics that you should consider, or that I consider when I'm deciding between two dividend stocks. And one of which is the operating profit margin. I want to see which company is more profitable. And according to this metric, they're similar as well, although AT&T is improving and Verizon is worsening. I look at that as an important characteristic. If a company is making progress, I tend to favor that company more so than the declining company. And here AT&T is the ascending company with the 20.14% operating profit margin. Verizon is descending in profitability, but its profit margin is slightly better at 21.44%. So similar in this metric here, not very much separates Verizon and AT&T in this regard. So far, the first two things we've looked at with Verizon and AT&T stock, it's hard to tell them apart. They're still very similar. The next metric I want to look at with these two companies specifically is their total long-term debt. And they both have very large debt. Verizon with $150 billion in debt and AT&T with $137 billion in debt. These two are some of the most indebted companies in the world. Very few companies have more debt than Verizon and AT&T, and they've been working on this. Both companies have started to pay down their debt. AT&T mentioned that they're going to generate some of their cash flow towards paying down debt. Verizon has already made progress in paying down their debt, and they continue to do that. The reason they're focused more on paying down debt in recent years is because of the cost of debt is increasing. 2 years ago, before the Federal Reserve started increasing interest rates, AT&T and Verizon were able to borrow at relatively low interest rates. I've got a video on Verizon and AT&T and the breakdown of their debt, and I'll link to that video at the end of this one. I also have it on my channel. You can see it. I've broken down and dug deeper into their debt, and their cost of debt is not very high, and it's spread out over several decades. So the principal amount of the debt is not a problem. What AT&T and Verizon are solving with regards to their debt is the debt that's coming due in the next couple of years, in the next 1 to 3 years. When they go to refinance that debt, they're going to have to pay higher interest rates because the interest rates are higher right now. So what they're focused on is this near-term debt that's coming due, to have the cash available to pay those off completely instead of refinancing and extending them. And then longer term, interest rates are likely to come down. The Federal Reserve has indicated that where interest rates are right now at 5.5%, it's above the long-term equilibrium interest rate. So interest rates typically gravitate towards that long-term equilibrium interest rate. Well, at times they can be above, and at times it can be below. The reason interest rates fluctuate above and below is the Federal Reserve uses interest rates as a tool to control inflation and to increase employment. So when the economy is too hot, like it is right now, the Federal Reserve keeps interest rates higher to bring down economic activity and thereby decrease inflation, right? If people are buying fewer things, then the price level is decreasing. And the opposite is true when economic activity is in stagnation or in recession. The Federal Reserve will lower interest rates to increase economic activity, to encourage people to spend more. And so that's why interest rates fluctuate up and down as it relates to the central bank. So Verizon and AT&T have done a good job managing this for decades, and I suspect they will continue to be able to manage this effectively going forward. And comparing these two, Verizon has a bigger debt burden. AT&T has done a better job in paying down this debt. So in this regard, AT&T has a slight advantage compared to Verizon. So in addition to looking at the company's past, I also like to look at their future, the prospects for the next 5 years. And according to Wall Street analysts that are following Verizon stock, they think Verizon will grow their earnings per share at 1.04% over the next 5 years. And that's a very small rate of increase in profitability. And AT&T is similar, as I'll show you next. The analysts on Wall Street that are following AT&T stock, they think it's going to grow its earnings per share at a rate of 0.71% for the next 5 years. It too has a very small expectation of growth over the next 5 years. And they're so close, and the earnings per share growth rate is so small, I would call this a tie or give it slight advantage to Verizon, given that their earnings per share growth expectations are slightly ahead of AT&T. Another important metric I like to look at is the return on invested capital. This measures how good a company is at generating profits on the investments that it makes in the business. And in this metric as well, these two companies have not done a great job. The industry is a mature industry, not a very lucrative industry to be in terms of profitability. Now, the benefits of this industry is the cash flow. Cash flow is stronger than profitability because these companies are investing billions of dollars in the infrastructure for their networks. And then the cash flow that returns is what is the benefit. So they still need to account for these expenses annually through depreciation, but that's a non-cash expense, and then the cash flow from operations is better. So in recent years, AT&T has exceeded Verizon at 5.7% compared to Verizon at 4.7%. But looking back at the decade, Verizon has been ahead of AT&T in this metric for the better part of the decade. So even though AT&T is slightly ahead right now, I would give the advantage to Verizon here because for the better part of the last decade, it was ahead of AT&T. AT&T will have to demonstrate sustained better performance for me to give them the edge in this metric. And finally, I like to compare the two companies I'm looking at on valuation. Now, these two that I looked at, I didn't see very much difference in terms of performance. They're very close on several of the most important metrics that I look at, so valuation becomes that much more important. And in this comparison, Verizon is trading at a forward price to earnings of 8.9, which is significantly more expensive than AT&T, which is trading at a price to earnings of 7.6. So I don't see that much of improvement in Verizon versus AT&T. And so if I was to pick one of these two dividend stocks to buy today, I would pick AT&T over Verizon. But they're very close, and it wouldn't be a bad idea to, instead of trying to pick one or the other, just take your total investment amount, split it up in two, and buy half and half of each. That's how close they are in terms of performance and valuation and expectations for the next 5 years. But if you had to pick one, I would go with AT&T. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.